Hello fellow investor, if you wonder what happened and how much money you can make selling a weekly covered call on QQQ or any other ETF, good news because I did this for the past 6 months and I'm here to share all the result of my trade. Before to start, if you don't know exactly how work covered call, I suggest you to check this video right here where I try to explain it at the best. And if you want evidence of all the trade done every week, you can check the playlist with the link into the description. So let's start it. The most important thing was for me to choose the strategy that I wanted to follow, because you don't need to trade option by heart, you just need to fix a strategy, a guideline, and just follow it. Because this is the only way you can really make money selling option, otherwise it's just trading on emotion, and this is not me, this is not something I like. Maybe other people do it, but for me it doesn't work. So I had basically 3 guidelines that I have to follow. The first one is to sell the covered call each Monday with expiration date on Friday. So I keep the weekend out of that. It means that my options are trading only for 5 days. Of course, if I will do expiration next Monday, for example, I will have also the weekend, which, yes, the market is closed, but it means there can be higher fluctuation. So I wanted to be more prudential, and I decided to keep everything within the week. It was also better for me in order to make here YouTube video, but okay, it doesn't matter. So this was the first step. Every Monday I sell the covered call. Every Friday I check the status and see the expiration. Point number 2 was to sell always out of the money and with a delta between 0.2 and 0.3. If you don't know what does it mean, here is my interactive broker dashboard. For my project, as you see, I didn't use interactive broker, I use Saxo Bank, but okay. So this, for example, is QQQ with expiration date of 13 December in 3 days. The delta between 0.2 and 0.3 means these two strike price, 396 and 397. So you see the delta is 0.2, 0.22, 0.27. What does it mean at this value of delta? It means, in this case, let's take for example 0.22, it means there are 22% possibility that the strike price will be triggered between now and the expiration date. So if we see in the opposite way as the seller of the option, we have 78% possibility to not get assigned. Because this is what we want basically. We don't want to get assigned, at least I didn't want to get assigned. So I choose a delta that is quite low. Of course I can have a delta which is much higher, like 0.38 or 0.45, it will pay a much bigger premium, so I will make much more money, but the probability to get assigned would be much higher. So I decided to put myself always in this range between 0.2 and 0.3. I choose differently every week for many reasons, out of my idea of how the market was going or out of the premium at the time, but anyway I keep always myself inside this range. Point number 3, I never wanted to get assigned. It means that if for any reason, even if I choose a low delta, I will end up in the money on Friday, I will not let the option expire, so I will not lose my stock, and by lose I mean sell it. It happened before in the comment that somebody told me like, but you're not losing the stock, you are selling it, you get cash in return. Of course, but my goal is never to get assigned because I'm long on my investment on 10-15 years. As I said, I don't want to lose my stock and buy back again. Also, this can open a lot of implication from tax point of view. Doesn't affect me because I live in the UAE where we don't have any tax on capital gain, but can affect somebody else. So the idea was to never get assigned. If for any reason I end up in the money on Friday, I just roll the option to the next Friday. This happened a lot of time, like I will show you in my file. And this, because it was quite common, but this is the best way for me not to lose the stock, but to keep my option open and to renew for the next week. So now let's take a look at the result of this project to see if I make money or not. Here in this Excel file that is online, link in the description, you see all the 24-week trade I did with the result, and for each week there is a video on the playlist, again link in the description. I try to be as much transparent as I can, even if unfortunately 2 or 3 weeks I were unable to make a video, so I just report the trade without the video because I was in some business trip. But anyway, let's analyze this file a moment. You see, this is the capital value I invested. The first 12 weeks I invested only with 100 shares, so I sell 1 covered call. From week 13 I start to sell 2 covered calls. So this project needs to be analyzed on a span of 2 different type of investment. This is a strike price I sold every time, the selling price, the premium I collected, the commission I paid to the broker, and this is the part of Monday. After in red we have the part related to Friday, when I was forced to roll the option or to buy to close, or if expire out of the money. So as we can see, of course, I get a lot of premium on that $7,000 of premium, but I pay anyway a considerable amount in order to close and to roll my option. This is something you don't see very often. I say many times during the course of this project, if you check on Twitter or on social media, there are a lot of people selling covered call. A lot of people say that they make thousands of dollars selling covered call. That's true because they focus only on this column right here. So yeah, $7,000, it's amazing just for selling covered call. But they don't look the other side of the trade where they are forced to roll the option or to buy to close or even to lose the stock and after to buy back at a higher price, because also that is a loss, is a cost in some way. You cannot put this column out of the equation and just focus on the premium you get. This is misleading. This is why so many people try to advertise selling covered call as a way to make million, but it's not true. And if you run the same type of investment strategy, you will notice that you cannot take this out of the equation. Anyway, basically I made money. I had a positive net result most of the time. And the only situation where I was not able to make a positive result was when I was forced to roll because I was deeply in the money, or if I buy to close also because I was deeply in the money. Because you need to understand that selling covered call is a way to hedge against the market. So when the market is flat or is negative, you take a lot of premium, but you don't lose your share. You're able in case to roll it and not to get assigned to the next week, like it happened many times. For example, like this, you see, I roll it and after it end up expiring out of the money. And the return of this investment is strictly connected with the performance of the stock. If we check, this is QQQ from July when I start the investment briefly right here up to now when I finish, you see that there was a negative trend or sort of horizontal trend of QQQ, and during this amount of time I made much of the money because I was always in green. I was always getting a net result, even if I was forced to roll because I was deep in the money. The next couple of weeks I end up not assigned, so I kept my share and I get money as a premium. But you know, this moment right here is exactly when there was a spike in the price of QQQ, because when you sell in covered call, you make money in this horizontal market or negative market especially, but in the moment the market turned positive, there is a sort of bull run, you end up losing money, or anyway you don't make the same money as just owning the share. If we see right here, I also put the capital gain or loss I had from the beginning of the investment up to now. This is a capital gain because we can see that I started my investment right here and now the price around 360, 370, and now the price is 392. So I always kept QQQ in my portfolio. I was always owning the stock, and this is why I end up with a little bit more than 4.7% gain, which is $3,500. Very good, I'm happy about that. And at the same time, I had a net result from premium of a little bit more than $1,000. I had a plus 30% gain from the net result of my option trading. Unfortunately, the situation is not exactly like this because of what happened on week 23. I will link the video right here, take a look. Because unfortunately I got assigned by mistake. I mean, it was my mistake, of course, it's not a mistake of the system. But I was lucky, I got assigned, but after the stock tanked and when I booked, I was able to buy at the lower price comparing the one I got assigned. So I get plus 700 and something dollar capital gain, let's call it like that. This is why here the net result is more than $1,000, otherwise would be a little bit less. Also, let's point out that during this time QQQ paid the dividend and I got $107 as a dividend that I insert here in the capital gain. So if I need just to analyze the data, yes, it worth it. It was better for me to start 6 months ago this project. I made money, I made more than $1,000 that was otherwise I will not make it, otherwise I will just make 3,500, which was the normal appreciation. So it's good. I used this money to buy an iPad for my wife for Christmas. This is what I did. But you need to pay extremely attention because I was quite lucky. I found the best moment to start this project, to sell in covered call in a moment where the market was downtrend, or let's say horizontal trend, as you can see right here. But if otherwise we go back and, for example, I will be in this bull market right here from beginning of the year 2023 up to July, probably I will end up with a negative result because I will get assigned every time, or anyway I will be forced to roll it, and at the end I will get a negative net result. So it's very important to choose the right time and the right stock when you want to sell covered call. After this 6 months project, but anyway after many years of selling covered call on ETFs or on my dividend stock, what I can say is that I really like selling covered call. I think this is a very effective method to make some money, especially when the market is uncertain, when there is a fear of a crash, fear of a correction. When this is the narrative, this is the best time to sell in covered call, because at the end the covered call is just an edge against the market. So when the market is going down, you keep your share, your investment of course capital wise is going down, but at least you make some money selling covered call and gaining as much premium as you can. But this system works only if you choose the right stock or the right ETF. You need to focus on something you are long invested. This is why personally I do on ETF like QQQ, VWO, the S&P 500, or I do on dividend stock that are in my portfolio for the next 10-15 years, because these are investments where I heavily long. Avoid to buy a stock or an ETF just for the purpose to sell covered call, because in the moment the market will go down, and it will, because statistically it will, you will end up trapped in an investment. You will own share of an ETF or a stock that you really don't believe long term, but is there just because generate a nice premium. So you will get probably a nice premium, but the value of your investment will go down and you will feel trapped and you will end up selling at a loss 100%. I think that's all for this video. Let me know in the comment what you think of all my project, or in general the covered call strategy, if you have some other strategy you think are interesting in order to trade option and to gain some premium. Follow the channel if you didn't do yet, because it really helps a lot, and see you to the next video.